and welcome to this week's look at major news stories that have affected the market so far and those that may continue to do so. And what are we going to take a look at this week? Well, we're going to start with the S&P 500, and it's on a bit of a march. In fact, hasn't had any major corrections for a while. Secondly, we're going to take a look at how a weak US dollar is driving certain other markets to record price highs. We'll then follow up a third video. We're going to take a look at some of the major currencies and what's been happening in them based off of things such as the inflation data we saw earlier this week. And then finally, we're going to take a look specifically at the dollar versus the yen, because there's a couple of other factors in play there. So we're going to start with the S&P 500, and that's been growing without a correction of 2% or more for 266 consecutive trading sessions. And we see some data that's been compiled by Bloomberg that shows that the S&P is remaining in its longest rally since 2018 without a decline of 2% or more at any point. Analysts note there hasn't been a correction of 2% or more in over 266 trading sessions. Pretty positive, it's fair to say. But what is this positive sentiment due to? Well, there's no getting away from the prospect of the Fed cutting interest rates. Now, CPI data earlier this week may have lessened the chance in the short term, but certainly the market is still expecting a rate cut at some point. And we've also, of course, got the AI enthusiasm and its impact on the larger economic development of the US. These really have been quite considerable drivers. So the fundamentals are strong, but some analysts at least, are saying the price may be overestimated. If we take a look at the chart, that shows the price is in the upward trend, which we're showing in blue. Now the price is moving within the upper half of that channel, and thus the median line is effectively becoming support. On the morning of the 14th of March, the market is still showing some signs of positivity, and that may indicate an attempt to break resistance at 5,200, which again would be a pretty important level. However, worth noting that the MACD is holding back some optimism as it's forming a bearish divergence pattern. Now, the market there thus could be vulnerable to a correction, possibly down to the lower border of that channel that we're seeing on the chart. So bulls should be cautious, but that sort of movement will require a trigger, and quite a large one. And it's worth, on that point, taking notice of the fact that data is due on the producer price index and retail sales in the US on the afternoon of Thursday, the 14th of March. So be prepared for spikes in volatility when that data comes out, and do not forget your risk management techniques. Okay, now we're going to take a look at the US dollar, and this sort of story was a little bit from earlier in the week, and the fact that the weak US dollar was a driver for some price records on other markets, including the Nasdaq, Bitcoin against the US dollar, and gold, XAUUSD. Now, the expectation of Fed action, lower rates in essence, puts pressure on the value of the US dollar, which in turn pushes up dollar-denominated assets. Now, we sort of first looked at this before the CPI data earlier this week, which did come in slightly higher, but this still all stands. Thus, Bitcoin USD exceeded $70,000 per coin. As of Thursday morning, the 14th of March, was still above that level. XAUUSD, so that's gold basically, that exceeded $2,200 per troy ounce, circa the 2170 mark now, so has eased off of that. And the Nasdaq 100 reached 18,400. Again, since earlier in the week, we have seen that ease off slightly. Pre-market currently looks around 18,166 for the Nasdaq. So are the markets a little bit too optimistic? Let's take a look at the Nas and have a look at the chart for the Nasdaq. The price is in the uptrend that we're showing in blue, and has been since the start of this year. And the fact that the price is in the upper half of that trend line indicates that there is some fairly strong demand out there. If we look a little bit closer though, the top at C was only just exceeded the previous top at A, and we are seeing some bearish divergence forming on the oscillators. And in fact, buyers of long positions at A found themselves slightly trapped, and those that had stops just above the level of A also saw their stops trigger and their positions closed. So the price movement from the tops to the local lows is also important. If we take a look at the chart there, that's A to B and C to D. Now, each time the bears move the price lower quickly as soon as it exceeded the 18,333 level. Now, perhaps that might have been profit taking as we've seen this rally so far this year, but it's occurred more than once. So 18,333 looks like an important resistance level. And we're seeing some support already so far from the median line of the channel. But if that doesn't hold and demand falls, we may see that price fall to the lower border of the channel. Again, we're looking for a driver. We're looking for a trigger for these types of movements. So the news out Thursday the 14th in the afternoon in terms of producer price index and retail sales could be a driver for the next movement. So keep your ears and your eyes open. Okay, so we've already mentioned that there was some inflation data out of the States this week, and we're going to see how it impacted sort of major currency pairs. And to be fair, they pretty much seem to consolidate after that data. So this CPI data was released Wednesday, and that led to some quite sharp fluctuations. Take a look at the euro against the dollar, for example, retested the 1.0900 level. And cable, that's the Great British Pound against the dollar, we saw that the support at 1.2800 did not hold. So let's take a look at each one slightly closer. Pound against the US dollar. Well, we saw some weak data come out from the UK earlier this week. That was on industrial production. And we also saw an increase in the unemployment level. That came in about 3.9% against an expectation of 3.8%. So despite rising, if you like, US inflation, that sort of data held things back a little bit and prevented the pair from developing a full-fledged upward trend. If we're looking at the chart, and that range of 1.2820 to 1.28, the figure 1.2800. Now, if that retains support, the price may rise towards the 1.31 to 1.30 range. But again, it really does depend on that support level. But fundamentals are certainly going to come into play Thursday afternoon, as we've already mentioned, with PPI and retail sales data out of the US, so expect a little bit more volatility and use those risk management techniques. Just flip quickly to the euro against the US dollar. Now, despite this increasing inflation in the US, which obviously equals less chance of a short-term interest rate cut, it managed to stay above the support level at 1.0900. What the chart shows us is we're not yet seeing an intense development of an upward trend. So it's still up in the air a little bit. But if we do get a foothold above the psychological level of 1.100, then we may well see a push up to 1.12. Again, we've got US data Thursday afternoon. On top of that, we've got Spanish CPI data out Thursday and a speech from the ECB. So take all of that information into account if you're looking at placing some trades. Finally, quick look at the dollar against the Canadian dollar, or the loonie, as we like to call it. Now, at the beginning of the current 5-day period, buyers try to strengthen above the 1.35 level, but the price returned below those alligator lines we can see on the daily time frame. Now, with an appropriate fundamental driver, the price on the chart could update the recent low at approximately the 1.3419 level. So again, we know we've got some figures out of the States Thursday afternoon. We're also going to see some figures out of Canada as well, which are giving us data on the sales volumes in the manufacturing sector. Again, yet another piece of data to keep your eyes open for. All of these come into play and all of these have an impact on the markets. Okay, finally, we've separated out. We're going to take a look at the US dollar against the Japanese yen, and we're seeing some analysts adjusting their forecasts. So since the start of 2024, the dollar yen's been an upward trend, which we can see in blue on the chart. But when it passed a psychological level of 150, sentiment changed. Now, of course, we say, well, inflation data from the States has a major impact, but there's also something else in play here, and that is expectation that the Bank of Japan will take interest rates out of negative territory for the first time in an absolute age. And in fact, officials have been giving some quite clear indication that this will happen. Thus, the yen sharply strengthened and the bearish A to B that we can see on the chart impulse formed. However, after it reaching about the 147 mark, the market stabilised, and Thursday morning we're seeing price around the 147.8 level. Looking at fundamentals, well, it's fair to say that US economy strength should not be underestimated, and that's something that's been said in Japan quite a lot. And if the Bank of Japan does raise its rates, indications are that they're going to, it won't be done in an aggressive manner. We don't expect to see some sort of seismic shift. So Nomura, Mizuho, Citigroup Japan have adjusted their forecast. And in fact, the average of those forecasts looks to be about 140 yen per dollar by the end of this year. HSB's forecast comes in slightly lower at 136. Now, technical analysis would suggest that the current recovery we're seeing may be due to the influence of support from the lower boundary of the ascending channel on that chart. Now, the recovery could end at 148.6, which will be equal to 50% of that A to B momentum. So that could become quite an important level for us. There you could see bears try a new assault on that lower boundary of the channel, and if that's successful, that could lead the price to reach levels of those analyst forecasts that we've just mentioned. The main driver here, I think, is going to be the next interest rate decision by the Bank of Japan, which is scheduled for Tuesday the 19th of March. So certainly keep your eyes open for that. But a change, if you like, in some quite traditional Bank of Japan thinking, certainly going to cause a little bit of shifts in the market and probably volatility. So as ever, risk management techniques, and we wish you luck for your trading in the week ahead. Bye for now.